attractive supply. So this was a very interesting trade because the intention here was very, very short-term swing. And I wasn't sure about what would be the correct extension of this trade. I think that was the mistake. I'll discuss this a little bit later on, but let's just look at the analysis first. We are in the downtrend, and as the price goes down, there is some kind of acceleration into the downside. So there is a climactic run that we're experiencing into the low of the sell-in climax. Please note that the sell-in is going down as the price continues making newer lows. Relative to the last move to the downside, we're seeing a change of character, and then relative to a much larger move and actually off the high of this whole formation, we're seeing a very clear change of character that suggests consolidation. And what's interesting about this consolidation is a little bit of the less horizontal shape of the trading range, but there are quite a few notable points that we should make here. I think that the first rally of the sign of weakness lows in phase B has a lot of great bullish characteristics with the increase in the volume signature in the effort and increase in the spread signature. Look how active and lively this rally is. In 3 days, the price travels from below the levels of the support to the resistance that was defined by this high right here. Upthrust action in phase B, and we are traveling definitely much quicker and more than, let's say, this rally right here. We are covering more distance, and that happens on 3 days. This is 2 days here, but the velocity is definitely much better because it's covering more of price movement. The next move to the downside, the next reaction, does not have a lot of supply behind it. And it also stops around the area where the first climactic stop in action has taken place. So also structurally a very bullish sign for us to consider. And then what happens next is even more of the bullish scenario. We're seeing how, first of all, this whole rally is just of a different quality. The distance that it traveled is much more than anything what we've seen before in the trading range. So therefore, we're experiencing a major change of character. And if reaction out of that high of the change of character is going to be constructive, we definitely would like to enter the position. Also, this type of commitment to the upside above the levels of the resistance that was created in phases A and B usually is going to suggest that institutions do not want to sell the supply that they observed during the consolidation. They do not provide that supply to the marketplace, and we could expect a favorable reaction and then a continuation of the bias to the upside. So let's look at the reaction. The major part of the reaction came right here, even though there was a first part, second, and then third part right here. So as we look through the second part, we are trying to identify, is there a lot of selling that's happening? And it seems that the actual supply bars are having somewhat of the decreased supply signature on the way down. So that just tells us that it's a very kind of natural reaction just based on the diminishing demand in this area right here, and we kind of see this from the volume signature. As demand contracts, we are expecting that fewer buyers will not be able to sustain a reaction, and the price will go down, but most likely the supply signature is not going to be very significant. The last bar has that increase of the supply, but that also is being associated short term with the stop in action of this trading range right here. So this acts as a small climactic action, stop in action, with its own trading range that has phase A, phase C, phase B, and then phase D that contains a sign of strength and a backing up action. And this backing up action comes again almost to the level of the climactic action, or to the level of the close of that climactic action bar, which kind of reminds me a little bit fractally, this scenario right here. This test happens on the contractant supply, and please note that this supply is much less than anything in phase C and anything in phase A. And that's a very, very favorable bullish supply signature on the final test. So that gives us an opportunity to open a position on any type of the reversal. Here is our entry. And we're expecting not only the rally to overcome this level, but also maybe come into the area where we had a substantial sell-in and produce some kind of stop-in action, reversal, or a change of character. We definitely have a really good rally right here, actually from the low to the high. Again, it's very comparable to the rally that we had from the lows in phase C, even slightly better in terms of the distance travel. Also looking at the character, it seems like the expansion of the up spread is happening everywhere. There is no really fading out of the momentum. And we could actually expect, even though we exited this position, and I'll talk about the exit in a second, we could expect some kind of continuation from this area. There is a localized climactic run that suggests that in the area of the long-term resistance, we probably going to have some kind of reaction, and that was the whole premise of exiting this position. I've exited slightly later than I would prefer it to be, and actually I don't like this exit at all. My preference would be either to exit right on the change of character bar right here, on the reversal bar of this latest significant bar to the upside, or just keep this position and try to continue with this run. So not the most effective exit by any means, but I thought that the analysis and the execution, the tactics of entering this position were actually somewhat okay.